Hello, today I wanted to talk again about the student loan forbearance, and the reason why it's a continuing conversation is the president just signed into law a few weeks ago now the extension of the forbearance. So instead of it being the end of this month, September 2020, it's now extended to the end of December 2020. So it gives you a few additional months to use the funds how you want to, or you can kind of continue the payments. One thing that I do want to make sure that you're aware of is there's different strategies, right? There's other things you could do that may be more optimal than just paying your normal monthly student loan payment anyways. There's still benefits of doing so. One of the bigger benefits, not just not having to make the payment, but there's also 0% interest. So if you log in right now, you're going to see it say 0% interest most likely for your student loans. Problem with that is it is temporary. If they made that all of your student loans for the existence of them, that'd be fantastic. It'd be a lot easier to pay those things off, obviously. But right now that's temporary. That's been extended to the end of December 2020. And so you have a decision to make. You can continue to make those, which is okay. It might be the best thing as far as paying off the student loan a little bit faster, but that might not be the most optimal thing with your whole financial picture, with all the things that you have going on. And so additional higher interest debt than what your student loans are. So that's obviously something that would be more beneficial. Aim your dollars at that. If you're paying higher interest somewhere else, it makes sense to pay that off faster and sooner than you would need to with the student loans that should have at least somewhat favorable rates. I know federal student loans fluctuate all over the place, but yeah, one example would be if you have the federal student loans, those are paused 0% interest. But then you have private student loans, those are not paused, and those usually have higher interest rates. So that's one clear-cut thing, but as well as if you have high interest auto loan, high interest credit cards, personal loans, anything like that, those are things you can definitely knock out, and it will be way more bang for your buck for those same payments that you were making on your student loans. So that's definitely something that you may want to consider if you have that situation. Maybe you're thinking to yourself that, you know what, I don't have any other debt, which is awesome. But if you don't have a full emergency fund, usually 3 months, if you've got two dual income earners, or 6 months if you're kind of an individual earner for yourself or your family, those are pretty aggressive targets. So a lot of people don't have them. Most Americans just don't have an emergency savings in general. So definitely building that up is going to be critical. And the reason for that is because if something were to come up, we're still in the middle of COVID. There's still people to this day being laid off due to COVID-related kind of slowdowns in their industry or company. And so you can't really expect that isn't going to hit you, because it potentially could. And so that's something why you'd want to have an emergency fund as funded as possible. But then also if something just came up in general and you didn't have the funds that cover it, you're going to turn to credit cards. And so that's usually 12% to 25% interest rate. So pretty ridiculously higher than what your student loans are. And so that's why it's so critical to start shoring up those funds and emergency funds, because that will definitely give you a lot more confidence. It'll relieve a lot of stress kind of as that day approaches. And the next thing, so technically, even if you have those things covered, you don't have any high interest debt, you have an emergency fund and you feel like it's well funded, there's still not really a downside to saving the funds. So since March, student loan payments have been on pause. If we go to the end of December and you don't make those payments and you start saving those up, the average student loan payment is around $300. So that's $2,700, because there's 9 months that you could save up in a savings account. And the crazy thing is, you can decide in December that, you know what, I actually do want to put this all towards a student loan. If you pay at the end of December, it's the same as if you were to pay that all today, or if you would have been paying that monthly payment all along. So there's not really any additional benefit because of that 0% interest, and because you're not required to make those payments. So that's one thing that just isn't an advanced strategy. It does require discipline to make sure that you're not going to just kind of use it to go on vacation or buy a bunch of extra things that may not be something that you need at this point in time. And so there's different options, there's different strategies. And so that's what this video is for, is just to let you know, you do have your options. You can definitely continue making the payments if that's just the easiest thing to do, but it may not be the best thing to do financially. So I want to make sure you're aware of that, because there's a lot of miscommunication and And I'm big on strategizing and optimizing, especially if we can put you in a better financial position, save you some money, and give you greater financial confidence. So obviously not everyone's situation is the same. So if you're confused as to what might apply to you, definitely reach out. I'm going to be reaching out to my clients individually. This is kind of what I shared with them back when everything happened back in March. I'm just going to kind of reiterate to them personally and let them know kind of what their options are. And reach out if you have a unique situation that you need clarity on, because that's what I do. I strategize on student loans and your whole financial picture.